Black Monday in 1987 is still the worst single-day crash ever in the stock market. And while we can't repeat that because ever since then they installed what they call circuit breakers where the market just actually just stops if it collapses like that, which they didn't have before, and that's why it plummeted so far so quickly. We are heading towards a similar situation, and this is actually a very important video if you happen to be watching, because then you'll understand that while we can't predict 100% the future, we can at least know that the room is filled with flammable gas and there's a heightened risk of something blowing up. And whether or not there's going to be an actual, little flint that sparks the blow up, okay, you can't guarantee that, and nobody knows exactly what that's going to be. But the fact that you're in a room full of flammable gas should give you pause and make you take some precautionary measures, and that's what we're going to talk about today. So the first thing I wanted to go over is this chart, which shows you the last time the stock market rose 40% in 1 year was actually what happened leading up to Black Monday. And so what happened was it just skyrocketed, right? It was 46% actually back then, and it just went up. And it's just elevator ride back down, right? And so what are we looking at here today? Well, today we're looking at a situation where we shot up 43%, right? Very similar, very similar. And so the question is, what's going to happen here? Are we just going to go to the moon? Or are we so stretched now that there's going to be an inevitable return to reality? And I'm telling you, the latter is more likely than the former. And let me tell you why. Because, see, most people don't remember what actually happened on Black Friday back in 87. And it's uncanny, right? So it's around October, same time of the year. What happened was, and most people don't remember this, there was conflict with Iran and the US. And Iran fired some missiles at some tankers that were actually owned by America, but they were flying a different flag, in this case a Liberian flag. And back then, after Iran hit that tanker, Reagan was like, okay, it wasn't flying an American flag, so we're not going to retaliate on that. And then what happened? Well, Iran said, all right, I'm going to hit another ship, and this time that ship's going to be carrying a US flag, and they did that. And so after they did that, the US struck back, right? The US warships destroyed 2 oil platforms in Iran. And that was a big component of what happened back then. And guess what's happening today? Well, we'll talk about it later on, but it's just uncanny, right? What's happening? It's like a replay of what is it in the Matrix when they called, the simulation screwed up and you realize something happened again? It was like called deja vu or something, right? Bro, this is like deja vu. Seriously. Now let's continue on over here. There's more I got to show you. The other thing to keep in mind was the last time that the VIX, or the volatility index, closed above 20 while the NASDAQ was making record highs was, look at these dates. 2000, the dot-com bubble bust. 2007, Great Recession. 21, we know what happened with that market correction. And now. And it's crazy, right? This is the last time it's happened in 24 years, and it's all in October, right? And we just got out of October, but I think we began something. And let me show you what I think we began. We began something that Warren Buffett, so Warren Buffett is like Michael Jordan of investing, right? Like, I don't care. You can say, oh, he doesn't matter anymore. Dude, Warren Buffett is Michael Jordan of investing. What he does works. That's why he's a billionaire. Berkshire Hathaway is the only non-tech company that has over $1 trillion market cap. All right? Everything else is tech, right? Except for him. He is the guru. And I hate that word, but he literally is the. I'm so like when he does stuff, you got to watch what the guy is doing, right? And what he's been doing is he's been cashing out of stocks, right, and buying treasuries. So now it just came out the other day, right, that now he in the reportings that he just filed, 325 billion cash. Keep selling. He's getting out of the stock market. He's been doing this for a while now, right? And he keeps doing it. And the reason why he has to do this so early is because he owns so much that he can't just dump it like I can in a single day, because that's going to collapse the price. So he has to like slowly unload over a long period of time more and more of his stock, right? So this guy's been doing it for many months now. This whole year he's been doing it, right? And he's been like building up more cash as he sells out his stocks. Now he has like 325 billion of cash, dude. This is no joke, man. He knows something is going to happen, and he's been steadily preparing, and so should you. Now, before I get into my positions, I just wanted to say a quick word here. Look, I do these stock and investing related videos once in a while because it's the way I make cash on the side, right? And that's the whole point of FoFty, is so that I can make this cash so I can build FoFty out, which is a philosophy on life and how to live life. And that can be my supplementary income. And I just happen to know stuff about investing and economics and all this stuff, so that's what I use. But if you know something and you have skills in something else, use that, right, to build a supplementary income. Don't wait for it. Start doing it now, like I am doing it in the area that I have some knowledge and expertise in. And I'm sharing this info to you because it might be helpful info for you. Now, I'm not an investment advisor, so all the legal stuff, don't take my word for making any investments. Go see a registered investment advisor, a legal one. But I share this stuff for you because it's knowledge that, you can incorporate into your thinking, right? And I think, the more people I reach out with this information, the more helpful it might be to them as they plan out what they're going to do with their lives. So that's why I'm doing these stock market videos every so often. But it's really a means to an end, right? And so let's get back to what I've been doing. So if you saw my video about at the end of September, basically, right, I showed you, I said, look, I'm going to tell you what I'm doing, not just on this stock market procrastination, prognostications and whatnot, but I'm actually going to put my money where my mouth is so you can see how I'm doing this and how I'm making money or how I'm not making money doing this, right? So it's like, it's not BS, it's real. It's real money in my real life. And, this was a snapshot taken in here. What is this? September 29th. That's what I posted last week. So end of September. So basically it's been a month, right? And that day I opened the position of long volatility, a levered position in a thing called UVXY, which is an ETF. And I bought 3,052 of it for about 79,260, right? And I said I bought this and let's see what happens with this. And I gave my reasons why I bought it back then. Now it's been about a month and I haven't touched the thing, right? It's still there. I haven't touched it at all. And as of last Friday, it is worth now 91,560. Same amount. I didn't touch it, right? And so what's that? That's like, I don't know, like over $12,000 in a month. Hey, look, $12,000 on in a month is not bad, right? That's like, $130,000 a year, and sometimes I make $20,000 a month off of just 80,000, right? So this is a pretty large percentage increase. And this is cash that it's okay to lose, right? It's not my main stash, which is a lot of it is in gold bars, which has been doing exceptionally well as a protector. But basically, this supplementary income is I trade like once a month, maybe. You see, I haven't even traded in a whole month, right? It's been a month and I haven't touched it. So it's like once or maybe twice a month, depending on what's going, if I have to get out of something, if it was a wrong call. But it's like very low amount of effort, right? It literally takes like, 1 minute to make the trade. I do spend time watching and reading what's going on in the market. So that's like, a couple hours a week. But, it's not like day trading where I'm like in and out, like, where you're glued to the screen the whole day, or even momentum trading, all these things. I don't have time for that, right? I'm trying to build FoFty. So like I spend very little time on this and it's just there. But if you know what call to make, where to put money, and it's easier said than done, right? Even if you know what's going to happen, to actually make money out of the thing that you know it's going to happen is not easy, right? That's why it's like the Olympics. Like Ray Dalio will say, making money in the stock market, it's like, you know, winning gold medal in the Olympics. Very few people can do it over time. And, you know, to me, this is it, right? So it's very low effort, you know, a couple hours a week of reading stuff, and it just sits there, right? And I haven't touched it, and it's, you know, anywhere between 10 to 20 a month, which is, again, you know, at 20, if, you know, consistently at 20, it's like $240,000 on the side, right? We're just keeping like a rolling $80,000, you know, window open, which is low risk for me. So, you know, it's just an explanation of how you can have side gigs, right? That to supplement your income and have many of these things going on at the same time. You don't have to be working all the time at a corporate job with 9 to 5 stressed out. You know, there's many ways to have diversified income streams where you're in control of the situation in your life and not a slave to a system that's controlling you, and the other way around. Now, going back to this, I still kept it, right? I'm still in the market, full position, and I'll tell you why. And it's not good, right? It's not, but you can make money out of it not being good, but it's not good. Look at this chart. I've shown this chart to you before. There's a couple of things going on here. Number one, when the Fed makes a pivot, means it's raising rates and then decides to pivot and stop raising rates and now starts to lower it, bad things can happen, right? That happened back in the 2000 dot-com bubble burst. Same thing, raising rates, pivoted, and then started lowering rates. Bad things happened. This was 2007, 2008, financial crisis. People think like, oh, the Fed's going to cut rates. Stock market's going to go to the moon. No, that's not always the case, right? Fed cutting rates, stock market go to the moon does not always happen. In fact, bad things, very bad things can happen when the Fed pivots, right? And guess what just happened this year? The Fed pivoted after raising rates because of inflation, and now just last September, it started with its rate cut cycle and did a big 50 basis points cut, right? So it just all of a sudden like started cutting rates. And when that happened, the market, if you look at the last episode, 2007, it actually, after the, you know, the Fed started cutting rates in this red line here, it went up a little bit, right? Yeah, whoa, we're going to go to the moon. And then that made the top, essentially, for the market. After which, the bear market started, and, you know, at the end of it, we almost like dropped more than half value of the entire stock market, right? It was a pretty bad and scary crash. So, what's going on today? Well, what happened was, just like in 07, right? Again, I tell you, we're in the freaking matrix, man. This is just this exact same day, down to the day, you know? Anyway, let's go back to this. In 07, September 18 is when it did the pivot and did its first rate cut, right? So what happened in 2024, same date, September 18, a day after my birthday, Fed cut rates. And guess what? Market went up. Market went up just like it did back then. After it cut rates, market went up. So market went up. And it went up all the way to 58.78, right? That was a couple of weeks ago. And here's the crazy thing. As the market was going up, my volatility investment also went up. I'm up 12,000 as the market continued to make new highs. See, I'm not an idiot. I didn't short the market. You can't tell when it's going to, you know, you can't play like gambling, right? Oh, I know it's going to crash tomorrow, so I'm going to short the market now. No, that's not the way to do it, right? What I did was I put money into volatility. Why? Because that's protection. Let me tell you why it's protection. A lot of hedge funds and regular funds, mutual funds and whatnot, IRAs, they're long the stock market. They make money when the stock markets go up because over time the stock market does go up. But what happens is if they think there's going to be a downturn or a drop in the market, you know, these long-only funds, they can't like all of a sudden just dump everything or start shorting the market, right? They can't do that because that goes against the prospectus of what the fund is supposed to be, which is to be a long stock market fund, right? So how are they going to protect themselves? Well, that's where the volatility comes in, right? They buy protection. And that's the way to protect and soften the blow if the market goes down without getting out of their long positions, right? Because legally they can't, right? They're a long fund. You know, the SEC will come after them. And so that's what happens is when, you know, these funds think something's going to happen or is around the corner, they buy protection, which is making the VIX or the volatility index go up. And what happens is as more of these funds buy more and more protection, the price of the protection also goes up. So the protection price can go up, the VIX can go up while the stock market's going up at the same time. And so I'm making money while the stock market is hitting new all-time highs week after week after week. Right? If I shorted the stock market pretending to be a fortune teller or one of these whatever's on the internet that claim to know the future, you freaking lose money, right? That's not the way to do it. So anyway, my positions have been making money as the stock market has been making new all-time highs. But guess what? Guess what's going to happen when the stock market actually goes down and corrects? The volatility is going to go even higher, right? Because you're going to buy even more protection. The thing happened, so now everybody's buying more protection. Volatility is going to go even higher, right? And that hasn't even happened, and I'm up already out of $80,000 or $79,000, $12,000. Imagine what's going to happen when it corrects. That's what I'm waiting for, and that's why I haven't sold my position yet. Since the high, and here's the thing, this might be the high, right? We might not know it yet, but it might be the high, right? As in like that high before this happened, or that high before this happened, right? After the Fed cuts rates, right? It cut rate, went back up, and that was all she wrote. It could be that, right? And we just don't know because we'll only know if we look back from the future 6 months ahead. It was like, oh yeah, that was the high, right? And I'm not going to sit here and tell you that I'm the fortune teller who knows that whatever, right? That was a high. Like, that's okay. If you want to play that game, go to Las Vegas, man, or bet in the elections. All right, so that's what's going on. Look, we already had some pretty significant corrections, right? This very well might have been the high if it is a case, and we're looking at something like this, right? And that is a scary drop. Now, this is a chart I shared a couple of weeks ago. And what I was showing here is my proprietary indicator here, right, was going up. And every time this thing goes above this line, this yellow line, you see by this purple lines, vertical lines, we've had serious, this is a monthly chart, right? So serious months of correction. This was the COVID crash, 30%, right? That's pretty bad. Back here, pretty bad. So it signals a change in direction. We had one here, pretty bad month after. And guess what? We've been like going way up, right? We're way up. And this was a couple of weeks ago before the month of October ended. And so what happened? The month of October ended and it's curling back down. Now it's going down. The moment it stops going up, bad things happen. We ended the month of October with a spinning top, right? That is not a good sign. So there's all these technical indicators you have to put. Not one will tell you the truth and the whole truth or nothing but the truth, but you look at a whole bunch of them and the picture will emerge, right? Just like in AI when you're throwing it a lot of data, and overall suddenly the picture emerges. The picture is emerging here that this may have been the top. That is a topping month, right? And so with that happening and this curling down, and you got the triple negative divergence with the RSI and the monthly hitting this red line that I said weeks ago, like if we hit that, we're not going to go above it, right? We're not going to go above that thing. We're probably going to bounce back down on the RSI. And look, we bounced back down on the RSI, right? So now we're probably going to head back down. We're probably not going to hit this because we've never been able to break this trend line over many, many years, right? This is going 2018. So we've got the MACD, right? Horizontal, one divergence. We've got the RSI going downwards, another divergence. So on a monthly long-term time frame, we're looking at some serious divergence. And then my proprietary indicator telling me that this is now curling down. We should at least see the monthly hit the EMA, right? Down here. That's what I'm waiting for. And once we do that, let's see what happens, right? Let's see what happens. But this is imminent, right? And that's quite a steep drop. Now, there's some very, very strange activities going on in the stock market. It's kind of like, your stomach grumbling before you have to go take a dump, right? So, It's grumbling. Really, you ever been in that situation? You're like in some meeting or something, and you're hungry, you didn't eat or whatever, and your stomach's like, everyone around you is like, whoa, what the F? And then eventually you run to the bathroom and boom, comes out. Well, same thing's happening in the stock market. And this one is a freaking huge grumbling, right? What it is ever since the Fed on, again, September 18, the same date I've been saying, started cutting interest rates, what has been happening is interest rates, or the yields, have actually been going up. This is the exact opposite of what the Fed wants. So obviously, the Fed is cutting its Fed rate so that the interest rates will go down, and so that there'll be more, activity with market, borrowing, mortgage rates for housing. Everything starts going faster again to prevent a recession or even a depression, right? Manufacture a soft landing, as they would say. So they started cutting. Employment looking a little sketchy. And oh my God, the employment number that just came out, freaking... Anyway, I'm not even going to go there. It was bad, right? It was bad, and of course they revised the earlier months downwards again, right? But the point here is, look, it's been going up. This is not good, right? This is totally not what the Fed wants. So now, we just skyrocket. You got to understand, interest rates don't move like stock market, stocks move, right? So when you see moves like this is not good, right? This is very worrisome. I can tell you right now, central bankers are very worried because the market is not buying what the Fed is doing, right? The Fed may have lost some control over interest rates, the real interest rates, which are the yields. So what's going on? So there's one of two things, right? There's one of two things going on here. One is the market just doesn't believe the Fed anymore. Fed cut rates like, hey, you screwed up, Fed. Bad policy mistake. Inflation is going to come back up, and you're going to have to raise interest rates in the future, and that's why we're basically telling you that's what's going to happen, and we're going to trade interest rates that way because you're wrong, Fed, right? You're wrong. Policy mistake. That's one thing, which is a horrible thing if inflation does come back. Then we have stagflation, and it's just not good, right? The 70s over again. The second thing that could be going on is it could be that the U.S. has finally hit ejection velocity, meaning escape velocity, and it ain't going to come back anymore. And what is that? $35 trillion in debt. And neither one of these two candidates is looking like they're going to curtail spending. Either Kamala or Donald, they're both going to be spending more, right? They're both going to be spending more. And they have $35 trillion in debt. Now, it's just stupid money now. You don't even know what $35 trillion even means. It'll never be paid off. And the markets are being like, look, that's it. That's it. You're going to have to give people higher interest rates to sell your debt into the market because you're so indebted already. And that's why interest rates are still going up. They're saying, look, it's going up because you're too much in debt. And whoever's stepping in doesn't look like they're going to keep this government deficit spending in check. So yeah, we know you're going to have to charge more. So look, one or the other or both is not good, right? It's not good. And so this is killing the move that the Fed is doing by lowering rates. It's not working, basically. It's not working. Eventually, the stock market is going to follow this, which means it's going to go down, because the bond market is what we call the smart money, because that, you can't just easily start trading treasuries like you can with a stock. These are more professional trading desk type of traders, right? Not like mom and pop like me trading treasury bills and interest rates and yield curves, right? These are the most sophisticated traders along with currency FX traders. And then you get the dumb money with the stock market, which is a much smaller capitalization. So the smart monies of bond markets are usually right, and the stock market is usually the stupid money, and the dumb money with people like me, like gamblers or speculators. And so what happens is eventually stock market returns to reality and follows what the bond market is telling you, and that is this, which means stocks down. All right. Now, the other thing going on is I can't believe the election is going to happen next week in a couple of days, right? And what the stock market does not like is this. It would have loved an election where one was going to landslide victory over the other, right? Then it's just like, it's no contest, right? Winner won. That's it, right? But when it's close like this, remember the last time it was close? Like, when it's close like this, a certainty, you're not going to know exactly. You may have to do a recount, and then, all the turmoil and angry people going on the streets. Stock market does not like that uncertainty, and that is another added pressure. Part of the reason why volatility is still remaining up, because it's been so darn close. And so this is also not good, right? This is just weighing on the markets, and another reason why I'm long volatility. The other thing is what's going on in the geopolitical. I mean, North Korea is like, they're like, don't forget about us. Surprise. I mean, they launched, so this new missile they have can hit anywhere in the U.S. Experts say it's too big to use in the war because, it's a big thing, you gotta like move around and they can find it and shoot it down. Yeah, I agree. If you're already in a war, it's not great, but they're not using this for a war, right? This is like when no one's looking and you're not expecting, they're going to launch it, right? And that's how they're going to use this thing. So, I mean, it's just useless comment. And this thing has solid fuel, right? Solid fuel. So this thing can go anywhere on short notice because now it's not liquid fuel, solid fuel. You can go anywhere and just launch it. Plus, they're in Ukraine now with the Russians. Yeah. It's not good, right? Because the whole Israel-Iran thing isn't going away. Look, after the Israeli attack, everybody thought Iran was just going to back down. They're not, right? The supreme leader's coming out and saying, like, we're going to hit you harder than we hit you the last time with our ballistic missiles. Because apparently the damage the Israelis did to Iran was greater than what they're showing, right? Meaning like some serious command and control centers were impacted along with manufacturing facilities for their ballistic missile infrastructure. It's not good, right? It was painful. More damage, and it was enough damage where the supreme leaders basically given the green light to the military and said, look, we can't just take that and like not do anything. We got hit pretty hard. Damage, right? We have to do deterrence, right? They need to know they can't do that again. And so this is coming. Whether or not it happens before the election, as they've been saying, or after elections, I mean, it's complicated, right? Politics are in the play now. But make no mistake, they are going to strike back. And if we go back to the whole thing about Black Monday, right? With the whole, like, oil fields being hit eventually, I don't know, you tell me if we're not in the Matrix, but it all sounds really, really familiar. And the U.S. also just sent a whole bunch of B-52s because of this, right? Because of the threat of them retaliating now, which everybody was hoping that it was over and then, we're not going to do anything anymore. All of a sudden now we got to send a whole bunch of B-52s to the region. I tell you, this thing is far from over. And as a result, there's a lot of heightened risk. Like I said, the room is full of gas, man. Okay, we can't tell exactly what the fuse that's going to blow the blink. You can't. But just know that you're sitting in a room full of gas, right? You'll be lucky if you walk out and nothing happens. It could happen, but it's unlikely, right? So this brings me to the end, which is you got, the major banks coming out and saying, look, you're going to have a decade of bad returns. Weak returns, 3% returns, returns lower than inflation, meaning you're actually losing money in real terms because inflation's higher than your returns. They're talking about 3% per year. That's like nothing, right? The good old days of the last 20 years of just putting your money in the stock market and doing nothing and just cashing out later is gone, right? That's over. Sorry to be the one to break it to you, but it's gone, dude. Sayonara, Mr. Miyagi, adioso, muchachos, right? People say like, don't try to time the market. It's not timing the market. It's time in the market. Yeah, that worked before. That was great advice before during the longest bull run that we've ever seen in history, and that was extended by the Fed printing money like no tomorrow, right? But like all good things, that comes to an end, right? Comes to an end, and now we've got this problems that you're seeing, right? That I'm talking about, the escape velocity, right? There's certain limits that if you breach, the jig's up. The jig is up. And so what that means is, well, you don't want to be you don't want to put look what happened to Japan. So Japan got hit like this, right? In the 80s, 86 was it, when their real estate market and stock market crashed at the same time. It took them 30 years to see crash, it took 30 years to get back to the same, 30 years to the same level. And that's not even, based on inflation, they're nowhere near the same level, right? You lost money in 30 years. 30 years is a long time, right? I'll be 80 years old when I'm 30 years, right? I don't have, that's not for me, right? I mean, maybe if you're 20-year-old, you'll be 50, you can make back your money. But I don't know. It's not the way going forward, right? There are many other ways going forward, which is why I've done things like stash a huge allocation into physical gold bars, which are in a high security vault, not too far from where I live, right? Like that has gone up like 40, 50%. Will continue to go up, right? As we have escalation. So anyway, let's see what the market brings next week, right? But I tell you, man, the room is freaking filled with some highly flammable airplane, quality gas. It is lit, dude. And so many triggers out there. All you got to do is I don't know, just wait and see. I mean, look, if that thing lights up and blows up, my position is going to do really well. And if nothing happens, it'll slowly peter out, and then I'll get out of it, right? At least, at worst case, I'll break even, right? And okay, so we got lucky and we somehow crept away from the room full of gas. And if that unlikely event happens, okay, it was a worthwhile position to take, right? Given the probabilities, and not lose money. Even if now I'm still up, right? But let's see what happens. I'll do another video to see, after the fact, what happened in the future. But if this kind of stuff, is helpful for you, or you like this kind of, please, give me a like, do subscribe, keep me going. You can hear more about this. See you in the next episode.